Today, we're going to show you a strategy using two moving average indicators. It's simple, and beginner traders can easily follow it. We'll also try to explain it in a clear and easy to understand way, so make sure to watch the video until the end. Let's first take a look at the indicator settings. Here, we first added the regular currency pairs, and we'll go through a few example setups. After that, we'll also show how the same approach looks in the OTC market. So let's start with the regular pairs. The indicator settings are as follows. First moving average, period 5, colors. Second moving average, period 12, and colors. Now let's look at the first analysis. Last time, the moving averages crossed to the downside, which was followed by a downward movement. This time, they've crossed to the upside, and the stochastic oscillator is also indicating upward momentum. If you're not familiar with how the stochastic oscillator works, we'll explain it in the next example. For now, let's keep it simple and focus on the fact that this is an upward crossover. We also shared this analysis on our Telegram channel. If you have any questions about this topic, feel free to ask us there. Link is in the description. Now, let's understand the next example in detail. After some time, we can see this chart where the moving averages appear to be working clearly. As explained in the previous setup, the downward crossover occurred during this red candle. It happened about 30 seconds ago when this red candle closed. So we can consider an entry here, slightly late. Now let's understand the stochastic oscillator in 30 seconds. It uses the 80 to 20 levels to indicate overbought and oversold conditions. If the indicator is already in the overbought zone and starts moving below the 80 level, it may continue toward the oversold zone. The same concept applies when it moves from the oversold zone toward the overbought zone. Just make sure to look at the previous price movement and check whether the market has been too volatile or not. As we mentioned earlier, this is a downward confirmation. So let's see how it plays out. As you can see, the setup worked well in this example, and we had also shared this setup on our Telegram channel. You'll find the link in the description where you can ask us any questions related to the setup or market analysis. That was the setup for regular pairs. Now let's look at a few examples in the OTC market and analyze them. Now we've opened the first OTC chart, and we can see that both moving averages appear to be working clearly. So let's try to identify a setup here. As you can see, both moving averages are crossing downward on this red candle, which may indicate a downward confirmation. The stochastic oscillator, which we explained in the previous example, is also providing downward confirmation. Based on this setup, we'll take a 4-minute downward trade and see how the result turns out. I just want to say one thing. Avoid rushing into setups. Wait for stronger confirmations whenever possible and take the time to understand this strategy and its analysis properly. Then decide for yourself whether it suits your trading approach. After waiting for around 15 minutes, we found another clear chart where upward momentum appears to be forming. Both indicators are providing confirmation. So let's see how this setup develops. However, keep in mind that losses are always possible. This is an important warning because if you rush, enter without proper confirmation or overtrade, then no strategy can provide reliable analysis every time. I hope you found this video informative and learned something useful from it. If you did, consider supporting the channel and sharing your thoughts in the comments. Thanks for watching, and I'll see you in the next updated strategy video. Until then, take care and thank you.